Yeah, you guys want to unmute, ask your question?
Hey Jan, how you doing?
Good.
Good. Yeah, so my question was, if there's a large disparity of income between spouses and only one spouse has the loan, is enrolled in PSLF, is it better to file jointly or separately to kind of spread out? I'm thinking if we file jointly, we're going to spread the income and it's going to lower the payments. Am I wrong or?
Right. So if both spouses have loans
No,
and
no, I
yeah,
don't. Only one
or
has loans.
only one has loans, yeah. And the one that obviously in PSLF, right? And they have the low income.
No, they have the highest income.
Oh, the highest income. Yeah. So right now, again, you're going to keep the current rules. This is only for new borrowers. The current rules will allow you to file jointly and then or you can file separately and exclude the other spouse's income if you want. Or are you in a common property state?
Yes,
Yeah. So
California.
with common property, for those who don't know, live on the West Coast, where most of those states are, when you file separately on your taxes, what they do is they don't separate. Let's say both one spouse makes 100,000 and the other spouse makes 200,000. Well, both spouses will have an AGI of 150 on their tax return if they file separately. Otherwise, they'll have a total of 300 there. So it can be beneficial for borrowers who are in a common property state like California and some of those West Coast states. I forget all of them, Oregon, Washington, maybe. Uh, it can be beneficial for them to file separately on their taxes so that they can even though the spouse with the debt has the big income, because then they'll divide it up. If you have one spouse that has a lot of debt but the lower income, then you can file separately and then use alternate proof of income documentation to lower your payment based on what your individual income is. So the answer is complex, but it just depends. So it depends on how much money each spouse makes on paper, whether you're in a common property state, and whether both or one of the spouses has student loan debt. But if the spouse makes most of the money, and let's say the spouse has an income three times greater than, and they also have the debt. So we'll say the wife, say your wife has the most, has, $200,000 in debt, makes $200,000 a year, and the husband makes $30,000 a year and doesn't have any debt, then you're going to want to file. You could file jointly in that circumstance, and your 30,000, the husband's 30,000 income won't really increase the payment that much, and you'll save money on taxes, right? Because you'd be in different tax brackets.
Mm.
So you have to weigh the costs between the separate filing with the IRS and what it's going to do to your payment. So um, it's complicated math, and there's no one size fits all for that. It would have to be, a specific assessment. But I can say, generally speaking, especially if one spouse that makes 200 and one makes 100 in a common property, and the spouse that makes 200 is the one that has the student loan debt, that filing separately will actually benefit you, because instead of using her $200,000 income, you would use the separate filing $150,000 income because of the proration they would do, the even split in the common property state, if that makes sense. So I don't know. Did that answer your question, Francois?
Yeah, I think so. Because right now it's like 420 versus 80.
Right. Right.
So
420,000. Yeah. Right. So
yeah,
so your combined income is 500, right? So
yeah.
if you file separately, you'll be you'll be the person who has $420,000 a year will actually show an AGI of 250, right?
Oh, okay. I was understanding it wrong. Okay, okay, that makes sense. Okay, so
Yep.
it's in this case it's better to go
Perfect
separately.
example, because the one that makes 420 is also the one with the student loans, right?
Yeah, exactly.
Yep. So that's the case. So if you file separately in a state that is not common property, which is 38 of the 50, most of you, then you'll need to file separately to exclude the other spouse's income. Oh, but you could also file jointly and include the other's income. And especially with IBR, if one spouse is 80 and that has 420, then filing jointly is probably going to be make more sense, just because the 80,000 dollar income won't increase the payment as much as the IRS is going to charge you for filing separately, because each spouse makes such a different amount. So it throws the tax brackets off, if that makes sense.
Perfect. Thank you. That answers the question. Thank you.
You're welcome.